It's getting towards the end of the first day here at the World Economic Forum in Davos, and the economic debates have been the usual mix of some optimism and a bit of gloom. I'd say the overall balance was cautious optimism, purely or mostly driven by the fall in oil prices, which people think will help industrialised countries to recover faster in the year ahead. If there's one part of the world where that's not so certain, it's the eurozone, where there's still a lot of gloom, and even thought that the action this week by the European Central Bank to introduce quantitative easing is not going to make a lot of difference. Now, there were two very interesting interjections on this ECB and eurozone debate today. One was from Axel Weber, the former head of the Bundesbank, Germany's central bank, former head. He's now the chairman of UBS. He said that actually what was really needed in Europe was reform by countries, and ECB was merely buying time, and that had been tried in the past and had failed, and he even sort of cast some doubt on whether the eurozone would be around for much longer if countries didn't reform. A very big important if there. And in contrast, you had the Prime Minister of Italy, Matteo Renzi, who again also said that things were really quite bad in Europe, and things would get worse unless there was a relaxation of austerity. He said you must have investments and not only austerity. So there we had two very contrasting views of what was needed for the eurozone, and I think this debate is going to run and run.